Hello, my name is David Linton, and I wanted to talk to you about the price targets that we launched last month. We've had a lot of people asking questions. If you're already using them, hopefully you will find this video useful as well. And I just want to explain a little bit more about how they work. And there's been quite a few improvements since we've launched them in the system, which I'll go through and talk about. But first, I want to give you just a little bit of background as to how the targets actually work. So the idea behind them is that they're derived from point and figure charts. And what I found is over the years, we've been talking a lot about point and figure charts and the targets. But the problem is lots of people don't want to use point and figure charts. And it's I myself remember in the 1980s that I rejected the point and figure chart as the chart that I wasn't going to use. They just looked different. The fact that there was no time in the time frame meant that they weren't really that easy to understand unless you'd learned how to use them. And yet the targets were really very, very good. And those of you who've used point and figure targets will see how often the targets are given and met. Now, of course, the interesting thing about point and figure charts was that they were developed before computers. And it was a shorthanded way of recording data when it was spitting out of the ticker tape. And here's an old point and figure chart, just to give you an idea, that basically people would update their charts by hand because there was no easy way of recording the data. And you would just simply record noughts and crosses to every time you made a new number, which basically made the recording of it much easier. And it really wasn't until the 1940s when Abe Cohen came out with his book that we really got the modern targets, vertical targets, on 3-box point and figure charts. So we've got a lot to thank him for. Now, when I was doing charts today, this was my typical screen, and I would run through this screen in charts today. And in fact, I've still got my old charts today screen here, and I would run through, and these were all the tracker charts. So I could literally just click on any instrument, and this was my weekly, my daily, and my 60-minute chart, my medium-term, long-term, medium-term, and short-term view of the market. So 1% log scale, 0.5% log scale, and these were the targets. So that was really what I used. But more and more people valued it, but they didn't really want to use it, and that was the realization that I came to. And so we came up with this idea of putting the targets on line-based charts. And typically I would be looking at 1,000 charts a day because I'd be running through probably 50 instruments for charts today. I'd do that a couple of times a day. 50 times 6, I do 300 instruments in 10 minutes, and I would just keep looking at lots and lots of charts. And so what was interesting, and I talked about the development of these charts, is that since computerization, this technique sort of fell out of favor. And in fact, it was quite a challenge to computerize it. We computerized it over 20 years ago. But the reality was that a lot of people felt they didn't need these charts anymore. And so it was sort of lost a little bit with computerization. Pre-computers, this was the way that you did charts by hand. And the sad thing about the loss is the targets, because the targets were very much part of the point and figure chart. And we have Abe Cohen to thank for the vertical targets for certain. And this is what a modern 3-box chart looks like. And as I mentioned, they were developed over 100 years ago. We had this data just spitting out of the ticker tape, and rather than recording every single price, you recorded every round price, and they realized after writing numbers down they could have a grid and they could do noughts and crosses. It was a necessary shorthand because you just couldn't physically, it was not possible for any human to record all the data that was spitting out of the tape. So this was also a type of noise removal, and it's quite sad really that the technique has been lost because people just don't want to use the chart anymore, and that's something we're looking to address with the targets. So the key thing about the point and figure chart is the setup. A double top buy was where you'd have a thrust off a low, a pullback by 3 units, and then a breakout. And this would be a double top buy, and this would be a double bottom sell. And this is confusing terminology and technical analysis because double tops and double bottoms are reversal patterns, whereas double top buys and double top sells are actually continuation patterns. They're different. So it is worth just making that differentiation. So the point and figure breakout is a setup really. So we have a thrust off a low, we have a pullback of 3 boxes, and then a move higher, and that is a double top buy. The double bottom sell is the reverse. And basically that's what generates the targets. You'd have that thrust off a low that would generate the targets to the upside, and the same would be true to the downside. And I would have my long term, my medium term, and my short term view of the market, and I would speak about these at conferences, and everyone would find it interesting, but people were just not going to use point and figure. They're a little bit hard to understand, and I think that was the key thing, is people just found them a bit dated, a bit hard to get the hang of. That was probably the number one reason not to use them. And then the other thing about the targets was that there was no idea of when a target might be reached. So that's something that we've looked to address with this new technology. We've been developing it for over a year. It's been in beta for several months now, and we're getting lots of valuable feedback, and more people are adopting it. But of course, because it's new, more and more people are asking questions, and I want to try and address some of those questions in this session. So it's hard to know when a target is failing. That was another factor. So there was no idea when a target would be reached because there's no time in a point and figure targets, which is something we've looked to address. And also the big thing that's come out of this is knowing when a target is actually failing. And there are other benefits emerging from this, which targets matter most, etc. And hopefully in this video these things are going to come out, and so I just want to share that with you. So the key thing to remember is that targets are about thrust. Now I've got a cricket ball here. I am a bit of a cricket fan myself, especially when Australia's playing England. So here's a cricket ball, and the key thing about a thrust off a low is just think about this. So if you are on the outfield of a cricket pitch and you want to get the ball to the far side of the pitch, if you just hold your hand here, you're not going to get it very far. You have to pull your arm all the way back, right down back behind your shoulder, to give it a really good thrust, and then it will go a long way. So this is the theory here, is that the bigger the initial thrust off the low, this initial uninterrupted buying thrust, so we don't pull back by more than one box. We then pull back, and then the really key thing is all these buyers are confirmed by a move higher. And the key thing about the point and figure is that you have to move a box size higher to activate. So it's not just reaching that same point or going a little bit higher, you have to go one full unit higher. And then the theory is, and this comes from the 3-box construction, there's no good answer to why that is, but and I'll talk about that in a minute, but the key thing is that you would then go 2 terms higher. So that first initial move is a third of the overall potential of the move. So that initial wave of buying confirms that. And so the key thing is the bulls are confirmed, there's a resultant thrust, and that's how it works. Now, there are 4 basic target factors that we've actually I've implemented, or we've implemented in the software. But the reality is, you could use any factor you wish. So this is where these targets have potential to diverge from just point and figure. So one of the key things is the idea of pattern. So we say the move into the pattern is the same as the move out. So you could just use 1 times. You could use Fibonacci, 1.618. You can use 2 arithmetic, which is an arithmetic, or 2 log scale. So some subjectivity is required. I tend to use the log scale, and I'll explain that in a minute. So this is a Fibonacci retracement, for example, and so the interesting thing about retracement in a Fibonacci is you get an initial move off the top, a rise, and then a pullback, and this works in reverse, of course, and that is the 1.68 reversal. So if you were using 1.618, that would be a way of employing Fibonacci, and you could do that on extensions. You could apply it to Elliott. There's no real restriction as to where you apply these. Now, thinking away from point and figure, and in fact we patented this idea, and basically looking to license it, but the key thing is that the unit size is really what was the box size. So now we don't have to think about boxes. We just think about the unit size. So typically you would say $1 or a percentage of the price if you're going to do percent. The number of units, that's the move off the low, that's T, and this describes the formula, if you like, and this is 50 pages in the patent that explains this whole formula behind it. But the key things are that we're now talking about time, and we'll look at that a bit further. The way to think about this is that the initial point and figure targets, this was the move, the pullback, and this is what that looks like in line chart terms. This is the downward one, this is the upward one. So it's just taking that and putting it into a time-based chart. So the key elements are that you make a low, and for it to be a low you have to have been at least 1 unit past the previous low. You then have a resultant move, a thrust, and off that low, and that's an uninterrupted thrust where you don't pull back by more than a unit, you just keep marching, doesn't matter how long it takes, and then you pull back by at least 3 units. This is configurable, and then you have to go a further unit above to activate that initial thrust target. And so that's really the ingredients that you need. So for upside targets, just thinking about this now in the line chart terms, basically you have an initial move, a pullback, you move at least 1 unit higher, and this now is the interesting bit, is the extent of the move, which is the factor which we just talked about. Could be 1, could be 1.618, could be 2, could be log scale 2, and then the time. Now this is the new bit, is the how long is it going to take? And in financial markets, when is often more important than what, and so that's really quite key, and we'll look at that when we start looking at some practical examples. The downside targets are the same in reverse. So you have to have a high, you need to have moved 1 unit higher than a previous high, then you come down with an uninterrupted sell-off with no upside reversals of 1 unit, and then you have a reaction, and then you activate, and then that downside target, and again the time to target is really key. So we've introduced some new terms in this because as we're doing the beta program, we realized that there's a lot more to this than just looking at the point and figure charts. Now on the point and figure chart, if you move below the place where the low was given on an upside target, the target would be negated. All those bulls are no longer there. It's been sold and they've been negated. So that's a target being negated. This is the pullback, and then you go higher, and that when you move that 1 point higher, that was the activation. So the target is activated. That's another point and figure term. The target is activated, and then when you reach the target is either achieved or exceeded. So these target achieved, target activated, and target negated is language that anyone who'd already used point and figure is familiar with. But the interesting thing is this new idea. So you see a target activated, but then you come back below the activation level. So we say that the target is deactivated. It doesn't mean that it's negative. It's if you like, I put it in orange or traffic light system. It just says the target's not in train at the moment. It's been deactivated. We're back below the activation level, and then we move to a place below the reversal point, which is where the next line of bulls came in, and that means the target is failing. It's starting to fail, and then of course the target is negated if we move below that level. Equally, the target is activated, and then anywhere along here the target is in train. But what's another thing that's become really interesting as we've done this is watching the idea that the target is exhausting. So I think one of the biggest advantages of these targets is you can start to see from the track on the chart when they're not starting to work out. So that's really quite interesting, I think, because one of the big things is just knowing when something's not working. And the same is true in reverse. So this is the downside, and it's really just flipping that upside on its head. So a target is negated if you move to a new high. It's failing if you go back above the reversal point. It's deactivated if you move back above the point where it was activated. And these are the targets in train. So that's really quite key. And again, you might see a recovery where you're diverging from the price. Now, point and figure takes no account of time, so it just sits there. Whereas with a time-based chart, you can see the price starting to wander away from the track of the target. So again, that's quite valuable. Now, this is what one looks like. This is actually a chart of silver. This was back in September. And here we've just got the different target definitions, and the Updata system's already pre-configured to have all of these targets on there. So basically, the targets, when they're not in bold, they're achieved. Here's an example of an upside target given, but then we pull away, so that target exhausted, it didn't happen. We did come back towards that target later on, and there wasn't a new downside target, so that did provide a little bit of confidence. Here we see a target that's been deactivated because we've moved back below the activation point, and now we've got an orange target and an orange target. Though neither of those targets is activated, we're waiting to see which way we move. That's the chart there, and that's what it looks like in a line chart. And so more and more people are finding that this is much easier to understand than that. So varying the target factor. So if you think about pattern, this is the move into the pattern. This is on the Sensex in India. Could be anything. This is the move into the pattern, the sideways move, and then the move out of the pattern. It's equally here, a move in, sideways, a move out. So here you would use an initial thrust of 1 and the target of 1. It just says, I've had a long consolidation period. I'm going to come out to the same extent that I came into the pattern, and that is a 1 times thrust. If we change the target to, these are all the same box unit sizes, 500 points. If I change the unit size to 1.618, the targets start to be a bit more dramatic. And then if I just use the 2 times, we start to see targets here. It's 85,000 versus 75,000. And then if I use the log scale, we get to 100,000 versus 85,000. So which one should you use? Well, I tend to use the log scale one. It does mean that more targets are not met, but it does also just tell me I've got to the point where I can tell when a target is failing. So that's the key. And the targets are approximate. I mean, sometimes they hit really well and other times they're not. So the big thing about this is the time to target. And this was always the big problem with point and figure. I mean, apart from the charts being difficult to understand, is how do I know when I'm going to hit the target? And that can really affect your investment decisions. You know, is it going to happen in 3 months or 3 years? And you know, if it's 10% in 3 months, then that's exciting. But if it's 10% over 5 years, that's not very exciting. And so it's trying to think about that as well. So the price time ratio is the one that I use the most. It's the first one, and I'll explain all of these. The thrust angle, the time to activation, and following the price, and historical average of the targets achieved. And there will be more, but these are the 5 that we've started out with. And we're already getting users telling us, oh, what about this and what about that? And it's all valuable information that's going into the pot, and we're sharing that information. It's been a great feeling of community sharing all of this. So in the drop down in the settings, these are where you set those, and I can show you that in Updata. You just literally click on there, and these are the 5 different ones you can use. And as I said, I use the first one the most. So that's where the settings are. You'll notice here the downside targets and the upside targets. And the bold ones are ones that are not yet met, and the ones that are not bold have been met. So this is the price to time ratio. And the key thing here, this was actually a stock that I did own. I've since sold, but this shows here that the targets took longer to meet. So here, you know, was it best to wait until there, or could I just curve fit the data? Now, personally, I'm quite happy to just see the chart like this. It gives me an idea. I've got what I call train tracks, but you could curve fit the data. So this is a 1 to 2. Is that right? If I go 1 to 3, and don't forget, this is a $1. And so what we're saying is it moves $1 every 3 days. That's that in terms of the move to target. That's not the general move of the stock. It's just when the target is in train, we're looking at $1 $1 every 3 days. And this is the beauty of using the daily chart. So $1 every 3 days, that's what that looks like. And you can see these now fit better than those. So it's literally just pulled those targets into a train. Now you may want to do that on your stocks. So you could either look at this and say, yes, I like the 2 is fine, I'll live with 2. That's the standard that I use. This is arithmetic as well, not log. And this is just simply $1. And here you can see that we're following the train tracks more. And whilst I've got that picture there, I'm feeling quite confident about how that looks. It just takes no account of the speed of the thrust or the time it took to activate. It just says, I've activated, I've made my first move, this is my resultant. At that point there, back in December, this target was given. Another one was given in January, and another one was given in May, and another one, when you see multiple targets given, that's what we call clustering on a point and figure chart. When you see multiple targets given, that's really key. Now, it is worth pointing out that this target was given, and the price just fell away. And in fact, that was deactivated. So that's really key there. That you just have to accept that some targets will not work out. And the great thing about this chart is it's much clearer than on a point and figure chart when the target is failing. Each time you move below the low points that they were given, the targets are negated. And you can see that when you're wandering away from the track. Now this is the second one. This is a thrust angle. I'm not going to dwell on these too much. You can play around with these yourself. Here, this is basically saying that's the angle of the thrust, and I'm going to use 2 times that angle as my move. And you'll see that you tend to get less train tracks. You get different thrusts because you've got different angles. So it's taking that initial move into account. It takes no account of the time to activate, and conversely you can do how long did it take to activate. So here, this is the time it took for the thrust to actually be activated. If it's longer, the target will take longer. And so here we see one that was longer. This one was quite short, so it's quick. This one was quite a long activation, so it's long. So it takes no account of the speed of the thrust. It just says how long did it take to activate. So that's another possible technique. And then follow the price. This one accepts that there's no, it's not predictable to the time to the target. It's just saying you can't predict when it's going to be met. But what you can do is assess it. And so you can just keep adjusting the targets based on how the price progresses. So this one's quite a good one. I use this one quite a bit to begin with. But what you need to do is you need to say ignore the last n bars, because here it's 5 days that I want to actually just see when we move away. So if I don't ignore it, it'll keep adjusting the targets, a bit like what you would do with a stop loss. And then the other one that's potentially quite exciting, and this will dovetail into backtesting when we start doing more and more with backtesting, is how well have the targets worked in the past. So here we can see this one is applied materials, increase per period. So this is the upside. It says that's how long it takes. The downside is actually quite equal here, but it's not always the case. Generally, prices fall faster than they rise. And so you can adjust your downside targets to deal with that. So here, what this has done, this is actually Apple. And these are all the targets that were given for Apple. This one is follow the price. Well, actually, what it's doing is it's putting the target on each place where the price was met. So you can see these targets were not predicting it would be met there. It's saying that's what happened. So it's looking back and it's putting the targets on the place where the price was met, and then it's saying this is the average. So the average time to target is 44 cents per unit, and the downside is faster. It's 77 cents. So upside target is 44.44% of a unit. So that's 44 cents a day, and the downside target is faster, 77 cents a day. Now that's not the rate at which Apple moves. I must stress this. That is the rate at which Apple shares rise or fall when heading to the targets. That's the critical thing, when it's on its way to the targets. So clustering in price and time. Now this is the really interesting bit. is that you start to get cluster zones in time as well as price. And so you can start to home in on a place where you're seeing an increased likelihood of where the price will go. You're looking for the train tracks, that's what I call the train tracks, and when you've got these multiple targets, that's what you're really looking for. Now, more targets pointed to the same price and now time frame increases the likelihood of the target. So that's what we're really looking for, and we will look at some practical examples of that. So we need to rethink price filtering, and this is something that any point and figure chartist is going to really struggle with, because here this is a daily chart, but if I want to go longer term, this is now a daily chart of gold, a 2.5% chart. This is 50 years of data, and if I look at a 50-year point and figure chart, that's going to be a 50-year daily chart. That's going to really just be so much detail on the chart. The point and figure has effectively removed that. So what, and again, point and figure should be tick data, but what we're really going to do now is we're going to diverge from the traditional thinking, and we're going to think about time frames. So this here is a monthly chart of gold, and this is the point and figure chart daily of gold. And what we've done here is we're now applying a monthly to the targets to a monthly chart. This is a very long-term chart in Updata. It will automatically say that in your heading. And now we're saying how many price units per month, which is one of the major reasons for going to putting these targets on monthly and weekly charts, is we can see how long the targets are going to take per month, per week, which if you were using point and figure, you would use daily. So we can see here, for example, that this is the chart on the point and figure. We're not getting these same targets because this is now a monthly chart. The targets are approximate anyway, and we just want to see the trend. Where are these targets pointing to? And point and figure charts, as I've said here, we'll probably find this hard to accept. But if we break to new highs in gold especially, we have activated these targets. So the targets are there, but we are just struggling to get above 2,000. We're actually probably in long-term terms, we haven't moved to deactivate these targets. We haven't, because these targets you would have to move quite a long way back. I've got a unit size of 1%, and it's saying 2,400, 2,600, and it's giving me a time, by the way, when I look back on the chart here, 2829. So 2028, 2029. So don't get too excited about these. Now, this is the thing. You see a target on a point and figure chart and you go, oh, wow, that's exciting. But there's no idea of how long it would take. So if this is the trajectory, then that's when it's saying it would be met. So that helps you making an investment decision. You can then watch the price and see whether it's actually going ahead of the targets or behind the targets. So you get a feeling along the way, which is the important thing of putting these targets on time-based charts. So one of the things I say now in terms of thinking about this is a look back. And the look back here is 300 to 500 data points to look back and 65 data points or bars to look forward. So if you're looking at a daily chart, you're thinking, 2 or 3 months ahead, maybe a few weeks ahead, but you're not thinking years ahead. You need a weekly or a monthly chart. And equally, if you're looking at the next few days, you only need to look back probably a month. You don't need to go back hundreds of days. So the approximate ratio that I'm using is around 5:1, and that's what I'm using on the charts. Now this, just the time horizon, is absolutely critical, and anyone who's watched my analysis will know that I'm looking at medium-term charts, daily charts. That means we're thinking weeks ahead, and I'm looking back months. Long-term charts are weekly charts. It means I'm looking months ahead, and I'm thinking about years. And short-term charts are 60-minute charts, and I'm predicting forward days, and I'm looking back weeks. And that's really, and I put here short-term and long-term because a short-term trader will have a different view of what long-term is versus a long-term investor. So the key thing is this is a matrix where I'm talking medium-term, I'm looking at daily charts. So you can also get clustering with different time frames. And again, Updata, one of the other big advantages of putting these on monthly and weekly charts is it gets very long-term, medium-term. That's already put on the chart. So I know what I'm looking at. And so here, this is gold. very long term. This is the monthly chart. This is the weekly chart. This is the daily chart. The 60-minute chart, that's short term. The 10-minute chart is very short term, and the 1-minute chart is probably ultra short term, but it's still very short term. And then see what we're seeing is we've got targets 2475, 2460, and there's another one here. So these now matching up as well. So that's clustering on time frames as well as multiple targets on the same chart. So you can think of things that way as well. When you get targets pointing to the same place on different charts or the same chart, that increases the likelihood that the targets are going to be met. The beauty of putting these on line-based charts is that you can actually compare it with other types of analysis. So here we've got Bollinger Bands. This is the target. There's the activation, and then the downside target, and there's a squeeze. I was actually fortunate enough last month to spend a bit of time with John Bollinger in Indonesia and Australia, and I saw him in New York earlier in the year as well. And it's great that suddenly you can use different types of analysis that we're all used and familiar to using, moving averages, indicators like RSI, whatever. You can now use these in conjunction with the targets without having to use a point and figure chart separately. And I think this is really, really interesting. And again, you've got multiple targets pointing to the downside. And then we have a move here, the squeeze. That's telling you that we're probably going to break to the upside. We've already got the targets in place, and those targets are met as well. So this is a 60-minute chart of silver. So it just shows you this is now thinking day trading, and you can use these on any chart you want. So one of the key things is understanding when the target's not working out. And this is my portfolio some months ago, and quite a few of these things have been sold because the downside targets start creeping in, and I just say, okay, the upside targets are not in train. So that visualization becomes really valuable. So let's have a look at the targets and how you use them. So the key thing is on any single chart, I'm just going to open a chart. There's the NASDAQ. I'm going to press the T key, and it automatically puts the targets on. And so this is using the factors 2. And one of the new things for those that were early on in adopting the system or the beta program, the latest version, I think it's version 15. You can just look in your help and see what version it is, or just message the help desk. But this is the unit size. It's using 1% of the price, which is, half a percent of the price. That's the default. And where does that default come from? It comes from, if I look at my chart properties, it comes from just the configuration. So this is the appearance, by the way. So my ones that are activated are in bold. My ones that are achieved are still green, but not in bold, the up and down. Unactivated is in orange, negated is in gray. These are the configuration settings. And you also can show the percentage value on just the last 5 targets. This is where the default setting comes from. This should be default if you download Updata. 0.5% log scale is the default that I use, and intraday it's using 0.1%, and we'll look at that in a minute. So the really key thing here is that's where it goes, and there's quite a lot of other factors here, which one to use. I use time price factors. And so you can configure all of that. But it's already comes pre-configured as I'm showing you now. So what's interesting here is it's just put the targets on, and I've configured. So you can see how these downside targets are given. That one was met a little bit earlier. This one was actually, this one was met a bit earlier. This one was met earlier. So that one was met on time. That one was met on time on the downside. But what I could do is I could just go and say, actually, the downside actually seems to happen faster. So I use 2 as my default, and I don't really alter it. But you can go and say, well, what would it look like if it was 1.25? And now these targets line up. So that's curve fitting the data. And you can do that on any chart. Now I'm going to put that back to 2 because I'm happy with 2 as my setting, and I'm happy to accept that some targets are met faster and some targets are not met as quick. It's just a guide. What I want to watch is the trajectory. Now that's on the daily chart. You can do this on any chart, of course. I can go to the 60-minute chart and I can press the T key again. This time it's saying 0.1%. And one thing we do know about the shorter term charts, if you're shorter term trading, is the targets tend to be quicker. Remembering on a daily chart that was 0.5% every 2 days. This is now saying 0.1% every 2 hours. And that actually might need adjusting. So we can see here that again, you could just adjust these. You could make these targets fit, and those would be your numbers. And the downside and the upside, this is new in the system, the downside and the upside can be adjusted differently because downside moves tend to happen faster than upside moves. Now, what's really interesting about this NASDAQ chart right now is I'm waiting for an activation. The market's due to open in just over 3/4 of an hour. I'm on delayed data, so in about an hour's time, I will probably find out whether that upside or the upside target or the downside target is activated. Again, new in the system, you can set an alert me when that target state changes. When it turns green, it's already got all the price information there. There's the trigger price, the target price, and the state is currently unactivated. Periods to be achieved to the target is 83 periods, and then the target state. So that's quite interesting as well. But you can put these on any chart you like. So you can literally, and don't forget, of course, with Updata, the data can come from anywhere. So I could actually just go and look at the S&P index in Updata. Well, in fact, what I'm going to do is change that to a daily chart because Yahoo is daily data only. And what I can do now, and we're compatible with dozens of different data services, but I can now go and look at the S&P chart on Yahoo. That's the S&P 500 index. Press the T key, and it's going to put all the trends and targets on. And again, we see here that those targets, they've been met, but they took much longer to meet, and this one took longer to meet. So it may well be that here you want to change this to something like, I don't know, 5. Let's see what happens. So we change that to 5, and you can see now that these targets, that's maybe just how long it takes on the S&P 500 index. I don't mind having it set as 2, but that's just shows you all the targets. So again, that's quite key. Now, remembering, and I've got lots of different data services set up in Updata. If you want to go to set up your data services, there are dozens, literally dozens. So if you've got any of these, or you want free data services, you can just configure them to whatever you've got. It could be Bloomberg, could be Icon, it could be, you name it, bar chart, lots of different services, DTN, and then of course the free data on Yahoo. So straight away you can be up and running through your stocks, and that's really quite key. So just press the T key on any chart, and it's going to give you the targets, and you can change those defaults if you want. So let's just have a look at how we resolve these targets. So this is the NASDAQ, and I did cover this morning in charts today, but we're waiting for this activation. I can then look at the long term. So this is the weekly. Remember, this is not normal in point and figure terms. So what's going on here? Well, I'm above the cloud. I like using it with the cloud charts because it just keeps reminding me of the trend. I'm above the cloud on the weekly. I've got this long-term target. It's 34,000 points on the NASDAQ, but in 2026. So it's a long way away. And then the key thing is that at the moment, I have got these downside targets in train. There was a little mini upside one there, and the downside ones, they're kind of dominating that long-term picture. Make a new high on the NASDAQ, and that would be a different story. But that's quite interesting just to think about the long term before we look at the medium term. And here we see the medium term, and what's really interesting about that is we are running up, but then we're diverging away from the target. This target wasn't quite met. That's what we would call a little bit of bearish confirmation. It didn't quite get to the target. But now we're waiting. This will probably be a new thrust set up. We get a pullback and then a higher, and that will give us a new thrust. We'd have to go higher though, and we have to pull back and then go higher. So at the moment, we don't really have targets there on the NASDAQ. So that is quite key. Now, if we look at the S&P E-mini, and I tend to use the E-mini because as we saw on that Yahoo data, and this was actually activated this morning. It's quite interesting, and since then we've actually This was activated this morning, and we're now up 1% on the E-mini. We're up 1.5% on the Nasdaq. So that target is now almost certainly going to activate at the open. The market is looking more bullish. We're not quite above the cloud there on the daily, and again we can go back to the weekly. Didn't quite reach the targets there. The downside target again wasn't quite reached. This target was reached, and we are above the cloud on the weekly. So the market is actually starting to look a lot better than it was with these moves. So really quite interesting there. It's taking all sorts of things in its stride, like wars and US debt ceiling. It really is quite phenomenal. We just can't ignore what the charts are saying. So we want to look at something like the FTSE future, again for similar reasons that I look at the Nasdaq E-mini. I look at the future because the cash index is harder and harder to come by, and here we see the future has already activated an upside target. That happened yesterday, just at close, and then today we've come back a little bit, but that target has been activated there. You can see this more clearly. Downside target, we're wandering away from the target. That's where the divergence away from the track starts to tell us. And then we got a new upside target. So by the time that target's given, we're really not thinking about that. And that's the beauty of this versus the point and figure target. The more recent targets have probably got more value. And then we had an upside target. We didn't quite get to that. We had a downside target. We didn't quite get to that either. We've got a new downside target that's not activated, and we've got a new upside target. Now, it may well be that in the instance of if you're trading the FTSE future or you're thinking of this, it may well be that you want to use not log scale, you want to use arithmetic. And so we could just go and do that. I'm not going to change it on my tracker charts because those charts, I want to just keep that setting that I've got. So here I press the T key. It's going to put those trends and targets on. But what I'm going to do now is I'm going to say, instead of using log, use points. And now it's done a bit of a funny thing there, but let's say I'm going to use 100 points. So that's like a box size of 100. And you can see there that isn't giving me many targets. So I can just go down to 50 points. I'm going to get more targets because I've got more units. So this thinking about that unit size, if it's a 50 versus 100, I only have to go thrusts of 50 and reversals of 150 versus reversals of 300. And now we see that these targets still not quite met, but it's really quite interesting the way that we've got this up, down, and at the moment we are really testing the cloud on the FTSE. So it's quite a difficult picture. And we've got that US picture in our minds, but we have moved below the cloud. So that just helps you resolve how you do the targets. Because I could go shorter term, the 60-minute, etc., etc. Now, if you're in Germany and you're trading the DAX, you could do the similar. You could look at the cash, and then you could look at the future. And here we see on the cash, we have these downside targets given. We start to diverge away from those targets. Now, that's really where the targets are in train. We move out of the train tracks and we start to realize actually these targets are not looking likely on this time frame. So it was saying November, December. That's really off the cards now because we've diverged away from the target. Something very dramatically would have to happen. Almost certainly we would get another downside move. And if I wanted to know, I could go to the 60-minute chart because that's where I'm going to get my heads up that things are changing first. And what's interesting here on the 60-minute is we see we've got this initial thrust, a move, another move, another target. This one was met just a smidgen later. I mean, an hour or two later. This one was met on pretty much what was met earlier, but that's where we did hit. And we've got another one that was given just at the end of last week, and that's actually taken longer to reach. But this is just using that same 2-to-1 factor. I'm happy with that. I can see whether it's taking longer or whether it's happening faster. That's all I need to know, really. But the interesting thing is that there's no signs of any downside targets telling me more and more that these targets are on off the cards. And if I look at the long-term chart, again, we see how these targets were given on the weekly, we pull away. Given again on the weekly, we pull away. Now, this is 2021. This is when the Ukraine war started to happen. Russia-Ukraine war, and we start to verge away from that, and that target is no longer looking great. This one that was given here was met. So it was given in 2020, it was met. Another one was given, but it was given in early 2021. The war happened, and then we just see things starting to deteriorate. We had a downside target, then a new thrust upside, and that's giving us another target, but we're again just falling away from that. And if we make a new low there, we activate another downside target. Interestingly, right back to the low point of 2022. So by looking at these multiple time frames, you can resolve what's going on, and it can be a bit confusing when you've got multiple things telling you different things, but it does help you resolve. And we will look at some examples where everything is pointing up, and that's really what you want to be finding. You can do this on anything, of course. You can do it on currencies, you can do it on gold. So let's just take a look at gold. I get asked questions about gold all the time. So this is, and these are tracker charts. So just click here, and so we see on gold, we had this downside target given in May. It was activated at the end of June. We didn't quite get there, and it took longer. We had a little bit of a relief rally, but at the moment, very interestingly, we've got this downside target, but we tend to be just not following that. The longer term picture on gold shows us we do have an upside target to 25.90. We've got another one here to 3680, but we need to have a new high through 2075 in order to activate that upside target. And then what will happen is that target will move from there to the point of activation, and that will give you a projection into the future. So it just shows there while it's not activated, and then it moves along. So you can see these are the activation points. It moves along when the target is activated. That's how those work. So let's have a look at some individual stocks. And I did yesterday, there is a video, I did do a run through. It was quite quick. I'm limited to 10 minutes for videos on WhatsApp. This video is going to be about an hour long. And so this is a more in-depth showing you how the targets work. So I can just go through the Dow Jones. You could create any list you want yourself, and you could go through any list of stocks. You can even do scanning for stocks with the most upside. But the key thing here is we're looking at just the medium term and the long term. The medium term and the short term. And I can go and look at the long term. I tend not to have that on my screen a lot of the time. By the way, this little button here is the zoom, which zooms to allow for the targets. So this is 3M. It gave targets to the downside in 2018, another one given in 2019, not looking great. And it's below the cloud. This is certainly long term. The picture is not great there. And by the way, you can read off, so 2025, we could be 40% lower than where we are now. And 2024, again, it's approximate. We could be 15% lower than where we are now. This one that was given back in 2019, it was said that it would meet in 2022. It's actually almost been met. We're sitting at 92. We're not far off that 86. And so that's probably a year early. So these may well be a year early too. This is just a slow deterioration of 3M. Interestingly, on the upside, we've got targets some 9% higher, back to 100. But I really don't trust those targets with the longer term picture not looking great. You have this little mini target, but we are below the cloud, favouring the downside there just because that's the overall picture. If we look at American Express, financial companies just generally, there's the target that was given. That was given in July, downside target given and met. And it's just using the two, and quite often these targets are met bang on time, but not always. We've got a little mini upside target, but it's hard to get excited about this when you've got the picture being below the cloud. Apple, everyone loves Apple. Interestingly, I have to confess, I sold my Apple shares when these downside targets were given. I might have been early because we got this upside target. And you have to be brave to sell Apple because it's been such a great stock. These are all the long-term upside targets, but this downside target is the most recent one, even on the long-term chart, and just may well be that the darling of the US market is starting to fail. So that is just quite interesting. And we can do this for any stock. So Boeing has given a new upside target on the daily, but you'd have to be brave. It's still below the cloud. No short-term targets. What does the long-term say on Boeing? Well, the long-term does give some big targets, and we are still holding above the cloud, but it would be a brave investor. And we still do have this active one to the downside not activated. The picture isn't clear enough, and that's really the key here. And we can just go through some of these other ones, like Coca-Cola. Looks amazing on the short-term chart with all these train tracks, but the medium-term chart, notice how the target was given and met. It was met a little bit later. If we move to new lows, we activate a big target from 52 to 37. And again, I can look at the long-term chart, and you see how these targets were starting to fail, and now the downside targets are crept in, and we are on the weekly. We're below. The trend is bearish. We're below the cloud. We're starting to look lower. So that is really quite key. So you can do this on any chart. I'm just picking off the Dow 30. So if you've got your own list of stocks, you can just run through your portfolio and see where you've got stocks that look great with upside train tracks and downside. The banks, US banks, nearly all the US banks have got downward targets to around 20% lower. This is Goldman Sachs. A little relief rally, a pullback. Are we going to activate that target? That's the big question. This upside target suggests we might. We've got a new downside target, but for the moment on Goldman Sachs, it's not looking great. And if I look at the long-term chart again, these more recent targets are starting to dominate the picture. 17% lower, two targets pointing 17% lower. 2024, January 24 to May 24, sometime in the spring, I wouldn't be surprised to see Goldman Sachs at around $270, down from 326. And we can just keep going. I mean, you can go wherever you want. I mean, let's look at some stocks that don't look so bad. So here's Microsoft making new all-time highs, but the reality is we don't have a new thrust target yet. So it is bullish above the cloud. This is why Microsoft is probably going to become the US's biggest company ahead of Apple. It's a better looking chart. If we activate that upside target, we're going to 386 I'm reading off here, by the end of November. So I'm just reading off the scale there. And again, I can look at the long-term picture. Always good to have a fair wind here. No clear targets on the 1% chart. So that is a little bit of just tempers me a little bit, but there's no denying all-time highs are good. And they tend to be good on all time frames because by definition, all the time frames is making new highs. Let's have a look where else. We've got Pfizer. And here we see downside targets. Notice how these downside targets were given and nearly met. And on the short term, I don't even need to go and look at the long term. Let's have a look at, well, one I know that did look brilliant yesterday because I was looking at the charts was Walmart. And in fact, the Costco chart looks really good as well. So here, short-term targets going up, long-term targets slower than being met. These targets were given. Walmart tends to move slower than a lot of stocks, as steady as she goes, making new highs though. And again, if I look at the long-term picture for Walmart, we've got these train tracks. And so I can just zoom out on that chart. So we see here making new highs, and we've got that target's already been met. It was given to be met. It was given back in August last year. It was given to be met in April this year. It actually didn't happen until July this year. So you can say a few months late. So maybe these targets are just a few months ambitious on the basis of that target. So I could go and change the method based on the averages, but here I'm happy with this track. If it's going to happen over here or later, that's fine, but it's saying at the moment March to September, these are when I sort of expect those targets to be on the long-term chart. So that's one of the ways that you can do that. So it's really quite key that you think about just using these different time frames and how you use it. Now, if you're using Yahoo, you're probably just going to look at daily data and weekly data. There is an intraday data on Yahoo. It is free, and you can run it into Updata. So that might be a way that you'll do it. So you look at the long term and the medium term, and you'll make your investment decisions based on those charts. But you want to be finding charts where you're going up the track, and it's been great for me. I mean, I have to say, I had a pretty rough start to the year with my own portfolio, and it's just, once I could see the stocks that were going up the hill with these tracks, it really helped me, and I just got rid of stocks that had downward tracks. I just said, no, I do not want to be in those. I want to be in stocks with tracks that are heading up the hill. And that's really the way that you want to use this. So that gives you just a helping hand, hopefully, on how you use the targets. Don't forget that you can adjust these here. I use 2, and so don't feel you have to change these, but you can curve fit. If you're trading, you might want to do that, as we showed. So and I guess the key thing just to say here is that my daily charts I'm using 0.5%, my weekly charts I'm using 1%, and my 60-minute charts I'm using 0.1%. But that's all set up in the system as a default. So that is designed to help you, and hopefully that's helped you understand the charts. So the targets, the key thing about this from point and figure is that the targets are now on time-based charts. So that's groundbreaking. I mean, I still don't fully understand why someone never actually thought to put these targets on time-based charts like line charts or candlestick charts. And one thing I would say is, if I just open a chart of Walmart here and I put the targets on, I can actually go and then just say, well, I want them on a line chart, and it will do them on line charts. I want them on a cloud chart, it will do them on cloud charts. It will do them on any chart you want. You can then go and put your standard signals on there. So there's your moving averages. The beauty of this is you can have these targets on there as well. You can go and put RSIs on, you name it. The great thing about the charts with the targets is that they're all there in line with what you're already doing. So that's a really big advantage, I think. So you can read the signals, got a buy signal there, got the targets. Does that help me? The key idea is a unit of price and a unit of time. And so this idea, if I'm looking at 0.5% on a daily and I'm using 2, which is my default, that means when the target is in train, it goes up 0.5% every 2 days. And that then means, of course, it goes up 1% every 4 days. So that just helps you understand the rate at which you expect the move, and you're making a trading decision on this, remember. So if you've made a trading decision on this, you can then say, okay, well, that's what the rate at which I'm expecting this to happen, and if it's going slower or faster. So not many charts are making new all-time highs at the moment, so it's quite interesting. The result move, it's not restricted to 3 box or point and figure even. You could have a pullback of 2 boxes, 2 units, 1 unit even if you wanted, but you'll get many more targets. And then weighting towards the more recent targets. So you see on the time-based charts, you see those more recent targets more clearly. The clusters in price and time, we talked about that, where you've got a zone where you see all the targets pointing to that place. And this visualization of targets in train. If you see the train tracks, that's really good for your long, and you're seeing those upside targets, you're long, that's really good. Conversely, if you're long and you see downward train tracks, that's really alarming, and you do not want to be in stocks long where you've got the train tracks to the downside. This whole new concept of deactivation and targets failing, and of course you can apply these now to weekly and monthly targets on those bars. And the great thing is, again, if you're using 1% on a weekly and it's 2, you're saying it'll go up 2%. It'll take 2 weeks to go up 1%. So that's how you interpret that when you're heading towards the target. The 3 main advantages are that point and figure charts are dated. You know, it was developed way back and people don't want to use these. Since the birth of computers, all the data's coming in. I don't really want to use this anymore, but I don't want to throw away the past. That's the really key thing. I don't want to throw away the past. The idea of when a target might be reached, we can now look at that, and knowing when a target is failing, that's really quite key, and perhaps other benefits are emerging, like which targets most. So I'd say, why not give it a go? We are doing special deals for existing clients, private clients. So see for yourself. It's pretty powerful, and we've had lots of great feedback, and I'm grateful to all the people who've given us great feedback on using these. I think it's pretty groundbreaking. I certainly would not want to trade without these now, so hopefully you'll feel the same. Let us know what you think, but give it a go. That's it for now. Hope you'll join us.